I don't think there's anything totally unique about it, but I think what does stand us apart is we're constantly looking for that edge. What's going to be the next thing? Is it going to be something that makes us even better 5 years from now? Going global is a rational decision. A third of the world's market capitalization in fixed income and equities is in the Americas, a third roughly is in Europe and North Asia, and a third is in Far Asia. So if you're going to capture opportunities, being global makes a lot of sense. So, we didn't invent that. Active indexing we didn't invent. It was being done in places all over the street. It's just that we felt it was a great way to do our strategy, and it was cheap and transparent. Running a simple, transparent portfolio, to me, makes more just a business sense. Mutual funds were one of the greatest inventions ever. It got individual clients away from their advisors buying individual high volatile stocks and bonds for them at very high cost. And you look at the last 15 years, you can see the struggle for mutual funds to beat any kind of stated benchmarks. And I'd say a big chunk of that, they won't admit it mostly, but it's costs. So contrast that with the expense level of a firm that's figured out how to do that exact same thing, but with 10 or 12 index positions, right? Our costs are really research and our relationships with our sponsors and market makers and stuff like that. That's a huge differential. We may not be able to get the alpha generated by a firm buying stocks in Botswana and South Africa, but it doesn't really matter. We're only shooting for a portion of that idea. We're going to buy maybe an Africa fund, and that'll get us close enough. And I would say without the volatility of buying individual stocks and without all the rigmarole of having to actually show up at a local bourse and buy said stock. When we go to conferences, I run around and meet a lot of third-party managers like myself who are really happy. We're early days in our business. Advisors are going to finally figure out that they can't get paid a lot of money for rearranging mutual funds on the deck of the Titanic, right? They have to get back to their client and say, not that I've screwed up for the last 10 years. It's that I am smarter now. I have gone out and I found a new way to access risk markets for you, and it's through this active indexing process using ETFs.